What's up guys, welcome to the channel. In today's video I'm going to talk about false expectations in trading. It's already episode 13 and I think it's about time that we do this episode. But there are a lot of false things about trading going on TikTok, on social media, in movies you see trading, high tech, entertaining, quick in and out, but that's of course not the reality, and that's what we're going to talk about in this video. I'll show how my routine works and what I do on the charts every day. Like and subscribe as always, I really appreciate that, and then we'll start right away. So trading is not that entertaining. It's not like action every minute. We're not in and out of trade every minute. We don't get dopamine every minute. Trading is a lot more boring than these edits and those gurus make it seem. If you're on the charts all day, you're getting bored. And let me just start. It's not really one specific thing, but let me start with an example. So today it's Monday when I record this. Of course, in the weekends there's less volume. Surely last week's on Bitcoin, Ethereum, on crypto in general, there's not much volume on the weekend. And then of course you're a bit hyped on Monday to trade. So let's look at Solana, for example. You can ignore this for now. Let's go to the 15 minute. So this was this morning. Of course this was during the night, but when I woke up around 8 a.m. You see price did absolutely nothing until 2 p.m. So for 6 hours price did absolutely nothing, just ranging here. I mean 0.5%, but on Solana that's not that much. On Bitcoin it was less. That's nothing. I can't trade on that with my strategy. Maybe you can with your indicators or whatever, but I can't. And today was especially a day off. I was behind the charts. I wanted to trade, and then you're behind the charts and you see this. You can't trade and you feel empty, you feel bored, and you have not a revenge feeling, but a feeling that you want to trade, you want to grind, and that you literally can't. And that's point one of this takeaway, is that you don't have to give up everything, and I also explained that already in the earlier episode. Still go to school, still have a job, still have hobbies. Don't just go all in on trading, because it's going to be boring over time. Even if you're profitable, it's going to be very boring. So that's the first takeaway. And the second is that feeling, what I described. You have to deal with it. That's building discipline and having a great mentality. You have to deal with it. And more about that mentality I'm going to explain right now. So what happens? I'm behind the charts from 8 a.m. to, let's say, 2 p.m. And I'm not saying I'm sitting like this for 2 hours straight. Of course not. I've done my second stream, or I'm looking every 5 minutes. Then I look away. I say, today the volume is not there. What a shit Monday. What happened? So I of course indicated my levels. I indicated this level, and this is my stop loss. What does price do? It perfectly taps my entry and goes to the moon. I would have had my TP somewhere here, and then I would have had a nice winner fully up to there. Perfect trade. Would have got me some nice money to start off the week. First of all, I didn't set a limit order. Why? I had the level, but I was bored. I was like, I'm behind the charts for 4 hours now. There's nothing happening. Not even going to set a limit order, because price is not going to do anything today. And then you see what happens. And so that's also the ball with the discipline and mentality. Yeah, this was a shit feeling that this trade worked out, but it is what it is. And these are just some minor things as a trader you have to go through mentally. So let's look at a realistic trading routine. So I'm going to tell you how my routine is, and of course you don't have to copy this, or not all traders have this. This is also because we trade on price action, so we can set our levels or zones where we're looking for trades, and then just come back later. We don't have to have indicators and see what happens right now, or when the indicator says buy or sell. We don't have to do this. So in the morning, before school, before work, just when you wake up, before you go to the gym, whatever, you go to the chart and set your key levels. Now, as I also mentioned on a video on TikTok, follow the TikTok because there are some gems on there. I said this doesn't have to be an hour long. My trading routine in the morning is 15 minutes. I check Bitcoin, Ethereum, gold, Solana, and maybe some other altcoins or things I see on my feed, Discord, whatever. And it's not taking an hour. First of all, because I'm already a bit more experienced, I can easily snap my levels. And secondly, because I do this every day. Because I do this every day, I still have some levels from yesterday. And to give you an example of this, for example, I do this every day for months. If I open my daily folder, all these levels here are already there and they're still relevant. So imagine price starts pumping, I already have those resistance levels and potential trades, because when we were here 2 months ago, for example, we dumped here, we were here, I had my levels, of course. These are trading opportunities, but price never went there. But these levels are still valid and trade opportunities, so they're still there. And that happens with all levels. So I already have a lot of levels. Of course, when price does this now. I have to adjust my levels. Here might be a level created, or here, of course. And that's what I do every morning. And then I look for potential trading opportunities. So if you do it the first time or you do it once a week, of course, it's going to be you spend a lot more time. And as I mentioned, not as I mentioned, but you don't have to, if you want to trade today or tomorrow, you don't have to set your levels up at all-time high. They have no meaning for the moment, they're not relevant, but just set your levels here. For example, this level, or this is support, potential long, potential short. So that's what I do in the morning for all my assets I trade, and I'm keeping an eye on. Then the next step. What if you're about to enter a trade? You found a setup, you found your level, price is going to your level. What do you do? So first of all, always check, double check, triple check if this setup is valid. Personally, I'm not the type of guy to say, oh, this is an A plus setup, this is a B setup. You have those guys that rate their setups. Of course, I have certain things. My setup has to complete, or let's say check off, for me to be a setup that I can trade. But still, if it doesn't check off everything, it doesn't mean I don't trade it. Because if you only wait for the perfect setups, you end up trading nothing. So that's not a play, in my opinion. But you can say, for example, am I following this plan? Is my level correct? Is it against a trend? Is it this? Is it that? Following all your rules. And for example, as I mentioned, it goes against the trend, but that doesn't matter because you can still trade against the trend, but maybe lower your risk. Or no, maybe this is not the smart thing, maybe skip it, but you can always just lower your risk and still, get a trade and feel experience, have it in your journal and learn from it. So that's one thing. And then of course your risk management and position calculation. So for example, I'm going to enter right here when price comes here. Let's say, of course, price comes here. So I calculate my position size, go to a website, quickly fill it in, takes a couple of minutes maximum. If you're a beginner, for me it takes like 1 minute. Go to the exchange or connect it to TradingView and fill in everything. Then I double check, am I not risking too much? If my stop loss gets hit, I risk 1%, alright, that's okay. This, that, and then everything is set. Surely as a beginner you want to double check these things because you don't want to make a mistake, add another zero in that amount and then you're risking 100% or 10%. You don't want to do that, so surely at the start double check everything. Then the most boring phase. Waiting for setups is boring, but being in setups is boring as well, and it might even be more fucked up because you get a fake feeling of dopamine and happiness. Let's say I'm in a trade right here. I entered right here. Let's say my stop loss is here, my TP is there. Okay. Now you feel like constantly things are happening, but nothing is happening. Of course price is going, but as a beginner you might want to feel it or get a dopamine, but for me, I don't care if my TP gets hit while I'm behind the chart and seeing it, or I look at my phone, I'm doing something else and I get a notification your TP was hit. I don't care, and you shouldn't care because your plan is your plan. Now, if you enter the trade, you can perfectly look away because you have your plan. Of course, sometimes you have to manage your trade, maybe move your stop loss to break even or leave a runner open, etc. Sometimes yes, but actually now when you're in the trade, you can look away because you have your entire plan. You have if it hits that level, I hit my TP. If it drops in my stop loss, I lose this or I win that. End of the story. That's everything. But yeah, it's boring. Sometimes if you're scalping, of course, trading low moves, tiny moves, it can take 10 minutes, 15 minutes. But sometimes even if you day trade and don't even target big moves, it can take a couple of hours before you're out of the trade. That's part of the game. Me personally, I have something in my mind, I don't know why, that I can't really trade while I'm in another trade, so I can't just be in a Bitcoin trade and then go to XRP or Ethereum and search for another trade or be in another trade. I can't really do that. Don't know, that's just in my mind. So then I'm a bit stuck with trading. And of course there are other things to do, but still you're checking the chart and you really have to detach from that dopamine, from that feeling. What is this trade doing? To detach from that dopamine that you have to watch everything while you're in a trade, while you exactly know what you can win and what you can lose, so you really don't have to. If you enter blindly with 100% risk, of course you need to manage, but we don't do that. We got stopped out. But you get what I mean. The boring phase, just fill it up with other things. You have other stuff to do. You have to do other things. You don't have to watch a chart, watch every candle for hours long. That's not good for your mentality, not good for your mindset, and not good for your productivity at all. So one more thing about entering a trade, I use limit orders for most of the times. Limit orders are when you literally set an alert, but it doesn't give a notification, it enters a trade with what you want. More info about that, how to execute and how to enter on the exchanges in the next episode where I'll talk about Bybit. But yeah, just know I limit order. I don't really smash. It's not like I click buy now, I just have my orders ready. And after we're in the trade, I manage my TP. So most of the time I set that take profit is 70% and not the full trade or 80%. and sometimes, of course, as mentioned, you have to move your stop loss to break even. But that's really it. It's not that I'm going to tweak every single second, because that's not good for you. You're not, yeah, trading with your plan, and you're also managing too much, and you're losing your entire plan. That's not good. Now the trade is done. The trade is literally done. But when your trade is over, your trade either at TP or stop loss, or trade at TP and you still have a partial amount running. What I do is I go to my journaling, and of course, if you hit TP, you're doing that with happiness. If you hit stop loss, maybe it's a bit, I don't want to do this, but you still have to show the discipline and go to your journal and log the trade. You say, of course, this currency long short. This was my balance after, profit and loss, etc. And also very important, right after the trade, just say why you took the trade or your analysis, because that's still fresh in your mind. Because if you do the day after, it's not that fresh anymore. You might think, of course I remember it, and you do remember it, but it's not like tiny things you don't remember it. So fill in the reasoning right behind. And as I mentioned in the journaling episode, I always say take a picture of your trade. You can do that easily on TradingView, of course, and have it ready to see when you're backtesting your trades. And don't do it immediately. Don't do it right now, because right now my only thing I would see on this picture is I got stopped out. Now if price continues to do this, now take the picture, because you see what price is afterwards. Why is it important, you might ask? Imagine price does this, now gives the move to the moon. Then I know, for example, oh, my entry was not good, or my stop loss was way too high, was right into the liquidity. Or if price just does this, I know, my entry, my whole plan wasn't good. Or if you get what I mean, there are certain ways, certain outcomes to the trade that can actually help you more than just saying, taking a picture right now, my entry was not good. Point. Well, that's not the case. And also how results actually look. I win trades, I lose trades, I have break-even trades, I have losing weeks, I have winning months, I have losing years. That's a bit too much of losing, but you get what I mean. Nothing is perfect, and even if they show, and I can tell you 1,000 times and people still believe it, no one has a 100% hit rate. If you even see with AI, you think, oh, AI has to be right. AI bot with 98% hit rate. It's not true. It's not true. And you either believe me, or you say, oh, he's faking it, he's not saying the truth, and you pay for something and you lose your money. You do you. But yeah, that's why my hit rate is not 100%, surely not with a 3RR. My hit rate doesn't have to be 80 or 90%. We talked about that in another video. But yeah, trading is boring. If you're a full-time trader and that's literally your main thing, of course then you don't have to go to your job or go to your school. So yeah, the main thing is trading. You're behind the charts a lot. You can still do other things, of course, but that it is boring most of the time. It's boring, and of course if you start making money, it's less boring. But if you keep losing money and are still in that stage of not being profitable yet, that can be a very hard time emotionally, mentally. So then I guess still have hobbies, go to school, finish your school, or have a part-time job somewhere. You get what I mean. So the moral of this story, the moral of this episode is that trading isn't flashy. It isn't only profits. It isn't perfect. It's mentally training, surely at the start, surely when you're not profitable yet. And also, as always, consistency, discipline, and mentality. Those three are everything in trading. If you take this all seriously and you put in the hours, you're going to be profitable one day. I can't say if it's after a couple of months, after a couple of years, maybe after 5 years, after 10 years, I don't know, but you will, because you're just learning. And of course, if you learn a well-known and a well-proven strategy like price action, you're going to be profitable one day. Just keep the momentum in. So that kind of was it. Again, maybe a bit of a filler episode, but there's still some very nice lessons in this episode, and maybe like I did in the setups video, you may have a more realistic view of what I'm doing or what trading actually looks like in practice, instead of looking at the theory and looking at TikToks and looking at people who have Ferraris, etc. Next episode, as mentioned, we're going to talk about Bybit, so the exchange I use to trade crypto, how we get money on there, and how we trade, how the orders work. I said limit orders, TP before entering the trade, etc. Just everything like I did with TradingView. But that's for the next episode. I'll see you in the next episode, guys. Bye.